Hey YouTube, in this video I want to take a look at the valuations of the core holdings in Project 1 million. This article was written sometime in June 11, and at that time the stock market was nearing its all-time high of about 2,954. We know what has happened since then. The market has powered on. So, although valuations may seem high today, the market can still power on further. That's why I want to take a deeper look at the valuations in Project 1 million to see if they can still go higher. So the software I'm going to look at to analyze the valuations is a website called ycharts.com, and you can sign up for a free trial to use ycharts. If you don't like ycharts, you can also use morningstar.com. So on the left hand side you can see I have some of the stocks listed here, and these are some of the core holdings in Project 1 million. And then I also have some financial metrics. These are my preferred financial metrics. Metrics like EV to revenue, EV to free cash flow, and of course you also look at the revenue quarterly year-over-year growths. So let's look at Amazon first. So one of the metrics I like looking at is the enterprise value to revenue. It's similar to the price to sales ratio, but enterprise value minuses off excess cash. And this is very useful for companies that have a lot of cash on their balance sheet, like perhaps Facebook, Google, and even Amazon to a certain extent. So looking at the EV to revenues chart, right now Amazon trades at about 3.23 times its revenue. So this is not a historic high. I mean, over the last 5 years, that's what we're looking at over here. Amazon has traded much higher. So Amazon doesn't seem overvalued on the basis of the EV to revenues metric. So that's EV to revenues. Let's look at another metric. Let's look at enterprise value to free cash flow. And for Amazon, it's very important to look at the cash flow and not so much the earnings, because the cash flow is a more accurate representation of the money that's flowing through the business. So right now Amazon trades at about 42.77. So this multiple may seem a little high compared to the average, but even way back in 2015 it also traded at a similar multiple, and if you had bought back then it would have been a very wise decision. What is really important is how it fends off the competition from Walmart, Target, and Shopify. I've done a separate video on valuing Amazon and the proper valuation metrics to look at for a company like Amazon. The other thing I would like to note is that a company like Amazon perhaps deserves a premium multiple compared to other companies. It has such a strong moat. So that may be one reason why the multiple tends to be higher. Another reason is that Amazon is still growing very fast. Its revenue is growing at nearly 20%, and the free cash flow can even be more volatile. So there can be quarters where the free cash flow can just shoot up 100%. So if the free cash flow expands exponentially, this multiple will not seem very high very quickly. So that's another reason Amazon deserves a premium multiple. So let's also take a look at Amazon's year-over-year quarterly growth rate. As mentioned, the multiple a company deserves also is correlated to the revenue growth. we can see that Amazon's current quarter revenue growth was about 23.69, and this was an acceleration from the previous quarter. Amazon has had quarterly revenue growth rates of about 20% below way back in late 2015, but that accelerated all the way up to a peak of about 42% in mid or early 2018. So I'm not sure if Amazon's revenue growth rate can go back to this level, but I think it will definitely increase a bit more, especially with the emphasis Amazon is putting on 1 day shipping, and even I'm sure there's more to come. Maybe half day shipping will come in the future, and that will definitely push up the revenue growth rate. People are attracted to buying things quick, and that's one of the reasons people go to a supermarket, because they can get it instantly. And if you can get something nearly instantly on Amazon, there's more reason to buy on Amazon. Let's now take a look at the second biggest holding in Project 1 Million, and that is Alphabet. So let's take a look at the enterprise value to revenues first. So you can see that Google trades at about 5.023 right now. It has traded much higher in the past, and it seems to be around its average ratio for this metric. I think one thing that has suppressed Google's valuation is probably the threat of antitrust action. And my view basically is that it's going to be hard to really pursue a case against Google successfully in antitrust. So the threat there really is, I think, misplaced. Let's take a look at another metric for Google. Let's take a look at the enterprise value to free cash flow. So again, Google, like Amazon, is a company that tends to invest a lot. So that's why I like to look at the actual cash flow rather than the PE ratio. So Google is trading at about 27.72 right now. So it's not really low, but it's not very high either. Google has traded much higher. And companies like Google, Amazon, Facebook, and even Microsoft and Apple, these kind of companies have very strong moats. So they deserve a slightly above average multiple. So I would say 27.72 is about there for Google. It doesn't seem grossly overvalued in my opinion. Let's also look at the revenue quarterly rate for Google. So Google has actually maintained its revenue growth rate quite successfully, especially in the last few quarters. It was going up until about March of 2018. It dipped a bit, but is going back up now. And I think for Google's size, this is a remarkable achievement. There's definitely strong growth in YouTube, in the cloud space, and also in Google Play, and perhaps even in Maps and other applications. So I expect this revenue growth to be maintained, and it might even accelerate, especially with YouTube's strength. Now let's have a look at the third biggest holding in Project 1 Million, and that is Facebook. So let's take a look again at the EV to revenue. So Facebook seems to be at one of the lowest it has been in terms of its EV to revenue multiple. Currently it is about 7.342. It has traded as high as 16.51 back in 2015. So based on this metric, especially compared to its historic averages, Facebook does actually still seem to be a little undervalued, even as the market is at a high. Let's take a look at another metric, let's look at the free cash flow. So in terms of free cash flow as well, compared to what we saw earlier in terms of Google, Facebook seems to be lower at 24.99. It's also traded as high as the mid 30s or even the late 30s in the past. So Facebook does not seem overvalued based on this metric either. I think as with Google, Facebook also faces the threat of antitrust action. And as with my opinion with Google, I think that once perhaps some of these fears dissipate, maybe after the election, I think Google and Facebook will probably be able to reclaim higher multiples. Let's also take a look at the revenue quarterly year-over-year growth rate. So Facebook has been doing a good job of maintaining high growth rates. This fell off a cliff from where it was in March of 2018, fell all the way down to about 26%, but recently it has re-accelerated. Management still says that revenue will continue to decelerate, but we have not seen that yet. My personal opinion is that Facebook will be able to maintain a revenue rate in the low 20s at least for another year, and then probably in the high teens for the year after. So given those growth rates, I think Facebook is still poised to grow quite well. The other thing I want to note about Facebook is that the last year and maybe the last 2 years have been very investment heavy years for Facebook, because it's been spending a lot on building the security and privacy infrastructure that it needs. So I think as those take shape and those become fixed costs, and as Facebook grows, I think it will be able to expand its operating margin once again, and that will also boost its cash flow and profits. Let's take a look at the operating margin and the EBITDA margin for Facebook. The EBITDA margin is a good approximation for the free cash flow. So as we can see, Facebook was rising in terms of improving its margins, both for the operating margin and EBITDA margin. That somewhere around here, it was struck with a lot of controversy, and with the Cambridge Analytical scandal. So you could see the margins fell after that, because Facebook started to invest a lot more in security and privacy. But even with all those investments, margins still seem strong. The beta margin currently is about 44%. That's a very strong margin. Operating margin is at 34%. These margins can probably go back up to at least another 5 or 10% once Facebook gets its act together in terms of security and privacy. And I think that will give a tremendous boost to its cash flow and also to its valuation. So overall, Facebook doesn't seem overvalued to me at the moment. So those were the top 3 holdings in Project 1 Million. And I think they still have some way to go before they reach the top. Let's take a look at one more holding in Project 1 Million. And if there's a good response to this video, we will do a similar analysis on some of the other holdings in Project 1 Million. So let's take a look at Visa. So let's have a look at the EV to revenues first. So in contrast to some of the previous stocks we have looked at, Visa's multiple for this metric does seem to be at a, or at least near a historic high. Currently is about 18.48. In the past, it has been as low as 11.73, or usually it's been in the low teens, but now it's in the high teens. So Visa does seem to be a little above its average valuation. Whether that means it's overvalued or not, I'm not so sure. Let's take a look at another metric for Visa. Let's have a look at the EV to free cash flow. Again, with this metric, Visa still seems to be at a high compared to its previous averages. Currently is at about 36.46. It has been usually in the mid 30s or low 30s, even way back in September of 2015 it was in the mid 20s here. So Visa again does seem to be a little high, but Visa is a very high quality company. Not many companies in the payment space can hold a candle next to Visa. It has a very strong moat. And why do I say it has a very strong moat? Well, take a look at the operating margin. There are not many other companies with such a strong operating margin percentage. For every dollar that Visa makes, nearly 65.87 drops down to its balance sheet. That is a very strong operating margin. And Visa also has a good revenue rate. It's still growing in the low teens, and it's been growing in that region consistently for many quarters already. So I expect that to continue to be the case for Visa. So Visa seems a little high, but I wouldn't say it is in bubble land yet. So I will hold back a little on buying more Visa shares at the moment. So even as the market reaches new highs every day, I think some of the core holdings in Project 1 Million are still not overvalued. One reason I'm looking at valuations closely is because I've just started an eToro account and I have new money to put into the market. So I'm looking closely at valuations and trying to pick the right companies at the right prices. So if you want to join me on my eToro journey, you can sign up using the link in the description tab, and you can copy my trades on eToro. Remember, I still have a few people left who can get the $50 if you sign up using my link. And I believe that if you're in the US or if you're in Australia, you only need to deposit $50 in your account to get that bonus $50. If you like this video looking at the valuations through different perspectives, drop a like and drop a comment, and please share this video with people who think might find it interesting. Thank you for your time. Have a great day, and we'll see you in the next video.